Monday, November 11th, market analysis. Stan Ehrlich, good morning. Start out with the stock market indexes, go to futures, and then we'll be starting to talk about very soon the Santa Claus rally, which is very oversimplified and much too general for you to take, well, accurate, profitable potential of the historical tendency for the market to bottom out just before Christmas. But when? What day? More than one day? What time of day? And also to get out of the long or multiple longs. And I have three. When? Well, it's the early part of January, but what day, what time of day, and what other technique which you might develop to increase your profit instead of just following the exit rule. All of that I have, and we'll show you starting on Fridays. Oh, probably this week, maybe next week, but soon. Obviously, well in advance of you trying to take advantage of what we hope will be another profitable Santa Claus rally. And I'll also show you the track record like I did with this October lows, which unfortunately didn't happen this year. That's sad. All right. E-mini. Currently up just a little bit, half a point. Low and last, overbought. So it's a prime target for a bearish engulfing ER red sell signal. All it has to do is get below Friday's lows. Then we'll have a red sell signal. Then we'll probably be coming down at least to 59.26, give or take a little, of course. I don't mean to be so damn exact as to tell you that I'm going to hit the exact number, which happens occasionally, but I expect to be relatively close. All right. If the market doesn't hold at 59, 26, 27, then a much more profound, better buying price level, if it can get down there, would be about 57.30. We'll see what happens. But I wouldn't be buying overbought conditions. It looks like the market is trying to have a reversal, and we already have one in the QQQ. We'll see it in a minute. Today. Now, the 5-minute chart rolling over, about to or just barely made new lows for the day. Yep, it just barely made it by a few ticks, it looks like, in the last few minutes. All right, next. SPY, the granddaddy of them, overbought, third day, up just a slight bit. Prime candidate, just like the E-mini you would expect. And we have the two gaps to close. Now, the one that's much more important is the one down here, and it'll be closed if we get down to 576.76. So I'm looking for that to happen, but we've got to get, obviously, in the process below 585.5, which is the beginning of some support. So let's get there first, and then see if we can start to chew into the gap area and come back down even more. Major support is at 565, 10 to 20. Next, SPY 5-minute chart, rolling over, starting to make for the day session. Minor new lows are testing it right now. Next, QQQ has an outside down day and overbought conditions and ER official sell signal. All it needs to do now is to close below the closing price of Friday. Stay an outside down day or bearish engulfing. Then I'm expecting this gap to be closed very easily, and that would be 506.18. But this is the gap that's really a decent amount lower, 493, 494. Yeah, 493. And there's a very good chance that that'll get closed. That also begins a variety of support levels of significance over quite a bit of time. So let's see if we can get down into that gap closure range right here. We've got the signal. Now remember, you're not very low, much lower on the day right now, only 1.6. So if it closes higher than Friday's close, all bets are off, because that is not a bearish engulfing at the end of the day. Usually when these signals develop, they do follow through and they do close with a signal period, but occasionally there's enough strength before the close that closes actually as an outside up or bullish engulfing up day. Let's see what happens. I'm looking for it to maintain red and be an outside down day or a bearish engulfing down day. Next chart is a 5-minute QQQ, and it turned red. That's the key that it's got to trade on, and it's a small loss at the moment. All we have to do is start to make minor new lows, and it'll turn green, and it'll start to be profitable. Next chart is the NASDAQ futures. Today is the first time that it's turned yellow, overbought. All of the other indexes had been for the last 2 or 3 days. So now the NASDAQ joins the group of being overbought, prime target for bearish engulfing. All it has to do is get below the low of Friday, and we're relatively close. So this is the second one that's going to have a bearish engulfing, I believe, because it's pretty close to doing it already. And the 5-minute chart shows we're at a little bit of support right here, very minor. And all it has to do is slip a little bit more and we'll get below this low right there. And that's going to generate an outside down day ER sell signal that will turn the daily data red. And that'll be our key setup and signal for a short-term short sale. Next, overbought on the YM for the second day, but significantly stronger. Still higher in the day, a decent amount. And the YM is probably the last one that's going to turn south. I meant, have a bearish engulfing red single day, because it's the strongest at this particular point. And the 1 minute or 5 minutes, shows you that it's relatively close to the high. Okay, we're looking at Russell, overbought on the 4th day now and way up near its high. So this is probably, if it can drop down all that much to lower than yesterday's low, and that'll be also lower than Thursday's low because they're very, very close together. That'll generate a red bearish ER sell signal, but it looks the least likely. And the 5-minute chart shows us that it's real close to the high and last right now. Bonds. Well, they're down 5 ticks on the day, which is not much. Today is a doji, and you know that I have been talking about the low on November 6th, last Wednesday. I think could be, should be, looks like, and it's acting so far like it is a turning point. And if that's true, then for weeks now, every day almost, I've been talking about this being the last shoulder low on a 2-year head and shoulder bottom formation that is also in the notes as well as the bonds. So far, so. I need a close. I would have to give it a little more bumper room, but it would be nice above 119.06, but probably will start to do the job if we close above 1823. Then it's probably going to push above 119.06. Notes. Down on the day, 23 at the moment. Yep. We are still, ladies and gentlemen, short. From the top of the market, essentially, September 18th. Let me get rid of these little messages. There we go. And the profit's very substantial. We are short from a price of, give or take a little, 15.15, 115.14, give or take a few ticks. We are currently trading at 109 at 30, a little below 110. This is great. Our stop is the yellow STS right there, smart trailing stop STS, 110.27. I could lower that a little. I'm going to leave it where it is. I know I've changed the stop a couple of times on the way down to tighten it up. So far, it's been the right thing to do. Let's leave it alone, see what happens. I am expecting this to bottom out. I do think last week on Wednesday could have been the bottom of the market. And if you're buying at these price levels right now, your risk is a little bit lower and your profit, if I'm right, potential is a little bit larger. We'll see what happens. Now, energies, crude, big down day today. Not too much to go on. Looks like it's about to attack the main support area again, like it did in early September and early October. So looking for 66.5 and maybe even down to 63.50 in the next couple of weeks. Next, heating oil is doing about the same thing. Looking for a test of 2.11 and very probably 2.067 area and maybe breaking those lows. The trend is down. It is in a downward slanting channel. If it tests the bottom of the channel in the next week or so, we're going to be not only at the bottom of the channel, but also at support area. Bearish. Next. But at the same time, natural gas is doing very nicely today. We were long, but got bumped out with a scratch trade, basically. Too bad. And now it's starting to work out real well, but we're not in the trade anymore. Not quite sure about this. You know, we made new lows. We had a big, big reversal at the bottom of the market that was great on November 14th. I got to go with the flow here. We had a signal that didn't work out quite as well as I'd like. The stop was too close too quick, and I could have lowered it a little bit, but I don't like moving it in the wrong damn direction, exposing yourself up to larger risks, bigger losses. I don't like doing that. 1 out of a million trades, I might try that. Okay, bullish, bull signal. Support didn't hold very accurately at all, so that didn't help. Looking for higher levels. We'll see what we can do. Wouldn't be surprised to see it come up to 3.4, maybe even up to 3.6, 3.5 something. Down the tubes in gold. New lows completely. And it just is attacking right now the lows that we made on October 10th. Now, if that's broken, especially in a closing basis, and it looks super close to doing that right now, 26.19, the low of the day is only 26.17.7, very, very close to the low of the day. So it looks like it's going to do it, and that'll just increase the bearishness. So I am still looking for, as I said last week, 25.70, and maybe even a little lower than that. Long term, not sure. Didn't get any major sell signals at the top. Looks like this is a normal downside correction in a bull trend. So let's see what happens when we get back to support area in here. Silver, pretty much the same story. Breaking down, new lows for a couple of weeks, 3 weeks. Looks like it could come all the way back to support here at 27.80, 28 area. That's what I'm voting for. But we are very close to being oversold again. So there should be a minor bounce on the way down to 28 or a little lower. And very soon. Platinum not oversold. New low for a few weeks. Pretty much the same story. Great sell signal on the top of the market to the exact day, October 30th. Next, high-grade copper. We're short. Great trade. Got bumped out on Friday, and then all of a sudden, kaboom. So, too bad. That happens. New low for the trend. Looking for lower levels. Probably going to come down to about 4.02, 3.9, and relatively quickly. We're not oversold at 31. So looking for significantly lower levels. Next, grain markets. Now, you know that I've been talking about establishing some sort of a bullish foothold, pattern, chart activity, something I can grab onto to tell you that the market's starting to trend higher and give you some upside objectives, etc. Small double bottom in beans is working. Friday was the highest high since then, and the minor, modest upside objective is a little under 1060. but that just gets the ball rolling a little bit faster. We have to close over 1080 in order to have a broader, not the greatest, but a little bit sloppy, double bottom formation, which would push it up to 1187, a significant move, and start to turn a lot of other indicators, intermediate and longer term, bullish if they haven't started to do so already. Plus, it would be breaking major bear trend lines. Plus, it would be overcoming some resistance areas, and it would be able to reach into a major resistance area substantially. That would almost assuredly cause me to be intermediate to longer term bullish. And I'll be doing that, and in fact, well before we get way up to 1180 plus. What would that be? 1186, yeah, 7. So I'm liking what I'm seeing on the long side of the market, intermediate to long term. I'm not 100% convinced as yet. But if you look at soybean oil, looky here. Soybean oil has made a new high today for the year, going all the way back to the end of December last year. But we got overbought. We now have an outside down day or bearish engulfing. That is a brand new ER sell signal, explanation point. So I'm looking for now a downside correction, probably to 44.90-ish, a little under 45. It's 48 at the moment. And even potentially a bit lower. But the longer term picture is a unusual, little bit lopsided, possible head and shoulder bottom that does seem to be doing exactly what the pattern is supposed to tell you it's to be doing. Now, that would be the neckline drawn across the pivot points has been broken, rallied for a day or two more, reversed, came down, and almost exactly touched the neckline, which is textbook perfect. Turned around and rallied right into new high ground, including today's high, but has failed miserably at this point and has a brand new sell signal. These signals, I cannot tell how big a move down they're going to create and how long they're going to last, unless I incorporate other tools of the trade, like chart formations, maybe Fibonacci numbers, maybe measured moves, a variety of types of tools. But I mostly use support and resistance and RSI. So now bearish short term on soybean oil, looking for a correction, but the longer term picture is definitely looking very promising. And the minimum upside objective on this head and shoulder bottom, if it works correctly, and so far it has been, is up to 53.70. Soybean meal, almost the exact opposite. But just because it's been trending down doesn't mean it's going to continue. We're in a support area. We're oversold. We're in a prime area for this market to turn around and start to make minor, then intermediate, then more and more bullish signals. But it hasn't done it yet, like soybean oil has already done and is already up there. New high for the year in oil, but not on meal. It's the opposite, but it looks like it's going to start to rally. The current tick is down on the day a little. You have a doji inside day. It doesn't mean too much. Let's watch this very carefully, because then it's going to start to join some of the other bullish-looking charts, like corn has made a new high since the end of early part of July. Not staying there, hitting some resistance at the time it did that, and pulling back a little bit today from overbought conditions, and a resistance area top of it stopped it perfectly on Friday. So let's see if we get a little bit more of a dip here, and then what happens. Because I'd love to see this buy signal that we got on October 17th last a long, long time. Intermediate term neutral. I'm turning bullish very slowly, very cautiously. I have to see how this downside correction handles itself and where it bottoms out and turns back up again. And wheat made a minor new low here for about 2 months. Didn't stay there. We're currently trading well above the lows of 2 weeks ago. Oversold condition implies it's very close to turning up for some sort of a rally, which could be really big. It doesn't have to be very small. I see bullish activity, even though it made a new low for 2 months. Now, if it stays here and keeps on crumbling down a little bit, then I've got to expect a test of 522. But there's a chance that in this broad area of support that we will end up holding in here. Oversold, no close below previous lows so far. Cattle, new low, about unchanged, up a couple ticks. Gap to close on a little rally. I'm looking for lower levels. I've got my first support area almost finished. It almost tested it, came pretty darn close. I'm thinking maybe there's a chance that's it. We're now oversold. So could have a minor rally up to close the gap and then down again. Hogs got overbought, pulled back, closed the gap, started to come back up, didn't do it, made lower lows, bouncing a little bit today. Not very clear cut on what hogs are going to do here, but I favor the downside correction is going to be a little bit larger. But intermediate to longer term, this is looking pretty strong because it made new highs for a substantial amount of time, going back to all of 23 and all of 24, almost 2 years. But it got overbought in the process. Not a surprise. The question is, will this support area hold, and will it start to make new highs again, which would be quite bullish? Otherwise, I could expect a little bit more of a dip down, but there's plenty of support below the market. Maybe 77 will turn up with a nice buy signal of some sort. Short term, a little bit bearish, next few days, week. Intermediate, next few weeks, neutral, but longer term, there's a chance we could get a lot higher. Can't really decide on the longer term yet. And we're back to the E-mini. Let's see if we made new lows while I'm yakking away here. Very minor, nothing special. This is a 5-minute chart. Yeah, it did make a new low for the whole session for the day. And low and last coming down pretty good, Spider. Okay, nothing else. You guys have a great day and profitable trading to you.